You're about to learn every secret, every power, every technique about HEIKIN ASHI. What is HEIKIN ASHI? How is it calculated? How to read bars? Advantages, disadvantages, what are the limitations, time frames to use, and best trading strategy of HEIKIN ASHI combined with EMA and stock RSI. Sit tight, it's happening. Hello friends, hope you're doing great. Today we're gonna learn everything about how to trade HEIKIN ASHI. As usual, today you will learn technicals, and in the next video you will learn trading examples. If you are ready, let's start. Okay, let's start with what HEIKIN ASHI is. Despite its cool name, what HEIKIN ASHI means is simply average pace or average bar. It smooths the price and gives us a clear vision of price action. So, it removes the noise from the charts, very useful for beginner traders. Is a financial security uptrending, downtrending, or consolidating? It helps us to identify market trend signals. It's like a forecast for upcoming price movements. HEIKIN ASHI is a really useful type of candlestick, or you may even call it an indicator. It is really helpful to us to decide entries and exits during trends. It's not that useful during consolidations. I wanna give you a tip. You can use HEIKIN ASHI to support chart patterns because it clears all the noise from the charts. You can identify all types of chart patterns. Bull flags, head and shoulder, double bottom, or tops, so it's a very strong tool to use for all kinds of traders. Let's quickly compare traditional candlestick charts and the HEIKIN ASHI chart. As you can see, how easy to identify trends, price action, and chart patterns with it. Everything is much smoother. However, this does not mean it's superior to traditional candlesticks. It has a couple of significant disadvantages that I will talk about soon. The first thing is that you have to understand how it is calculated. It's quite different from the traditional candlesticks. It uses similar data points: open, low, high, and close. With traditional candlesticks, you can easily understand the structure, because each candlestick is independent with its data points, as you can see on the screen. However, HEIKIN ASHI candlesticks are dependent on the previous candlestick. You can see the formula on the screen. So, why use this weird formula? The idea is simple. Remove the noise and smooth the chart. Open of HEIKIN ASHI bar, calculated by taking the average of the open and close price of the previous candle. Close is calculated by taking the average of the high, low, open, and close of the current candle. High is calculated by taking the open, close, and high of the current period and choosing the maximum out of 3. Low is calculated by taking the open, close, and low of the current period and choosing the minimum out of 3. I know it's madness, but just focus on strong trend detection features. Now, let's learn how to read HEIKIN ASHI charts and understand trends. There are 3 types of candlesticks: bullish, bearish, consolidating. Each type of candlestick is a special structure for us to understand the price movement. Bullish candlesticks for strong uptrends. These green candles should have no downside wicks or just tiny ones for strong uptrends. There could be a wick at the top of the bar, but our main concern and focus is the bottom. If it is flat, this is great for strong uptrends. Larger bodies indicate stronger trends. If the bodies get smaller, it can turn to indecision candle soon. If you start to see this kind of candlesticks, it's time to evaluate the chart to open a long position. Bearish candlesticks for strong downtrends. It's just like the opposite of bullish candlesticks. These red candlesticks should have none or really small tails on the top of the bar. Again, our main focus is the top of the candle. If we see larger bodies, it's better signal for downtrends. When we start to see this kind of candlesticks, we either prepare to open a short position or close our long positions. Finally, indecision candlesticks. Just like doji bars, there are significant tails at the top and the bottom of the candlestick. Plus, the body of the candlestick is generally small. We see these candles mostly during consolidation periods or as early trend reversal signals. Indecision candlesticks are a great indication to take profit or close your position if you are already in a position. If everything was this simple, why doesn't everybody else use HEIKIN ASHI and become a millionaire and waves us from supercars? Like everything else in the world, the HEIKIN ASHI also has advantages, disadvantages, and limitations. Let's start with the advantages. 1. It's beginner-friendly, smooth and clear charts without noise, if you compare it to traditional candlestick charts. 2. Easier to identify trends and chart patterns. You can get an idea about a financial security with one look. 3. It gives you a clear entry period after trend reversals. It won't work all the time, but it gives us an idea. Okay, let's check out the disadvantages. 1. It's a lagging indicator. It does not represent real-time true price, so late signals could make you give poor decisions. 2. Despite a clear entry period, after reversals, identifying exits and stop loss could be tricky due to unreal price. 3. Trading at shorter time frames is harder with it. HEIKIN ASHI charts could not be enough responsive for day traders and scalpers to give quick decisions. So, let's check out the time frames to use. Now, for HEIKIN ASHI, there are no such universally accepted time intervals to use. The trading community is divided into two about it. I see some people use it for 1 minute scalping, and some others use it with 1 day time interval only. As a trader who started trading forex in 2010 and then moved to stocks, options, and crypto trading from forex in time, I do not enjoy using any trading tools which below 5 minutes with a lagging indicator and a false price indication. This is my opinion. The most preferable times are 1 day, 4 hours, and 1 hour for me. But many people use it with a 5 and 15 minutes charts, but I do not. Please try every time interval. Maybe you will find comfort and success in those time frames. Let's learn a profitable HEIKIN ASHI strategy step by step. Step 1. Confirm price with EMA 50. I need a price to be above EMA 50. Step 2. Confirm stochastic RSI. I need stock RSI to be below 50 and a recent crossover. Step 3. Confirm entry. As the last step, I'll teach you when to enter. Okay, let's continue with examples. Let's check out this Bitcoin chart with the HEIKIN ASHI. My trading technique is extremely simple to use. Let's go over step by step. Step 1. I want the price to be above EMA 50. This blue moving average is EMA 50 and the price hovers above it. This gives me an indication that this financial asset is in uptrending momentum for the moment. Step 2. Confirming stochastic RSI. Now with stock RSI, I look at two things. First, a recent crossover with upward momentum. Second thing is I need stock RSI to be below 50. This white line in the middle is set to 50. Because anything above 50 means that it's too late for entry and risky for us. Step 3. Now, entry candles are quite clear actually. After a pullback and red candles in a row, we are waiting for the first green candle with no wick at the bottom. I need no wicks. If I see even a little wick at the bottom, I wait for the next candle without any bottom wick. It should be shaved. The hardest part of HEIKIN ASHI is finding a stop loss. It could be really confusing because of the false price. You could mistakenly set a very tight stop loss. You may want to open the traditional candlestick chart before placing your stop loss order. I placed my stop loss at the bottom of the pullback very close to EMA 50. And my take profit order is at 2 hours. Let's go over another quick example. As you can see, our price is hovering above the EMA 50 line, which I really like. It means that upward momentum is strong. Secondly, I'm looking at stock RSI. It is below 50 and a very recent crossover. Amazing, 2 out of 3 confirmations already. Finally, I'm waiting for the first green candle without a tail or shadow after pullback. And again, even small wicks are not accepted. It should be shaved and flat. Then the trickiest part, placing a stop loss order. I place it under the pullback, just around the EMA 50. My take profit order is at 2 hours. Okay folks, hope you enjoyed the video. Would you like to subscribe to the channel and help me to grow it? I put insane amount of efforts into these videos to bring the highest quality content after lots of research, reading and with my life experiences. Thank you, please take care and see you soon.